Ladies and gentlemen, welcome back to Crypto 101 with Walk the Block. I am Zenith and I'm joined by my excellent co-host Tracker. Today we're going to be talking about onboarding, basically making your first foray into crypto, hopefully getting you onto a centralized exchange at the minimum, giving you some very, very basic safety tips. More of that to come in the later on Crypto 101 segments, but the whole point of this is we're trying to get you to the point where you are able to make your first purchase. Not saying you have to, but we want to get you be able to make your first purchase. With that being said, Tracker, how are we doing today?
Doing well, sir. Yes, we're going to be diving into the onboarding for beginners for crypto. This is for anybody who doesn't have any experience with crypto. This is the starting point right now. Obviously, Zenith has done another video around what is crypto and also inflation and hard assets. I highly recommend you watching that video as a predecessor to why you would even care about getting into crypto for that matter. But on this one, we're going to be talking about strictly onboarding new customers. And so what we're going to go into is the onboarding process, starting also diving into central exchanges. Why? Because it's the easiest entry point is central exchanges. We're not going to get into DeFi or DEXs or anything like that. That's more advanced. We're starting basic. We'll build on these principles. We're going to compare the different central exchanges, the ones that we like here. I'm not saying you don't have to stick to these, but we're giving you some that we know that have been, true and tested in these bear markets and have withstand the test of time is so far in crypto world. So we're going to go into those. How to buy the crypto. We're going to actually launch a video for one of the central exchanges to show you how to actually set up your accounts and the process you have to do. It's a little bit painstaking at first because there's just paperwork and CYA and things like that. And we'll talk about what CYA is. And then after that, we'll get into kind of the different options you have on these central exchanges. We're not going to go into everything, but we're going to very basic. And then, of course, the big thing is some of the best security practice. Because even though you're on a central exchange, and they control and they protect a lot of your assets, there's scammers, and there's a lot of rugs that have been going on. If you're not familiar with what a rug is, rugs are scams. We call them in crypto. It's a term we like to throw around, but basically people get scammed out of this, and there's a lot of tricks going on, especially with new advancements in technology with AI and agents and bots and things of that nature. And then we're going to go into these other areas as far as wrapping up in the end. Okay, let's get right into it. So on the big crypto you typically need to know about is everybody knows Bitcoin. There's also Ethereum and Solana. They tend to be the three that kind of are live a lot, certainly in the United States, because Solana is a big one that's in that area. But basically all this is these represent, we'll call them digital gold, smart contracts, and fast payment respectively. There's some arguments on Solana. Obviously, it's more newer. ETH and BTC are the battle tested ones. Bitcoin was the first crypto ever. Ethereum came along with smart contracts. So it's very important to understand that. We're not going to get into a lot what Ethereum is in this training session, but we'll be diving into that. Basically, think of it like crypto, but you can program and write code on that can be applied to apps and other tokenized assets. It's kind of hard to understand right now to explain because you don't have the full terminology if this is new to you at first. So don't worry about that. Then we're going to focus, like I said, on central exchanges. And then we're going to talk about, also the other thing you need to know about is top currencies. So top currencies, like we said, number one at the top is Bitcoin, and the way they are ranked in the way that their market cap is. So Bitcoin makes up the majority of all the crypto assets in the world. We're pushing currently right now around $4 trillion in the crypto assets. Put that in perspective, we're not even at the gold price. Like gold, I believe, is around 20 trillion. So that tells you how small the crypto world is currently still. But Bitcoin is number one, Ethereum, and then the so forth, the XRP, and then a couple of the Tether's a stable coin, Binance, Solana, USDC is a stable coin, Dogecoin, that's a meme coin. We'll talk about those later, and then so forth. These are the top 10, we'll say, cryptos that hold and control the most money in crypto. That's the best way to look at it when we talk about market cap. Okay, let's go on to the next one. Okay, we already talked about digital money for investing and payments, and of course, I would still highly recommend going back and look at Zenith. What is money and what is the history want to be in crypto, because it really dives into explaining, how is this an inflation hedge. So I'm not going to repeat it here. I recommend you go watching that. Did a really great analysis on that. Once again, central exchanges, why we're starting there, because it's the easiest entry point. By the end of it, we go through this. You should know what a central exchange is. You'll know which ones that we think are the safest ones to go to. Not saying you have to use them. We don't get paid for any of this, so it doesn't care. We don't care if you use it or not. We're just telling you what we use and what we know has, protected us through these crazy crypto times. And then at the end of it, you should be able to know how to buy crypto. Okay, so we're going to watch some video. We're going to go through some stuff too. So you should feel comfortable what the next steps are. Okay. So when we talk about some of these definitions, crypto is obviously a digital asset. It's on something called the blockchain. All you need to know what that is a place you can log into, and it's digital in the sense that you can log on any type of mobile device and you can look at what's known as a blockchain, which is nothing more than a ledger. So you can see every transaction that ever happened and who traded with who, with their addresses that represent their crypto coin or their crypto wallets, and how much they were trading. And so it's fully disclosed. But the thing in crypto is not everybody knows what address, this random long string number that represents somebody's wallet that shows what they own. Nobody knows who's behind that wallet. So that's the good thing about crypto, at least having your own protection, and that's basically how you're able to see it. But the blockchain is nothing more than a digital ledger that keeps track of all transactions. So it's fully disclosed. That's all you really need to know at this point in time. Bitcoin, everybody has given it the nickname digital gold because it's finite. It's only be 22 million ever minted, created. That's it. 21 million. Thank you, sir. That ever will exist. There's a reason why countries are starting to use Bitcoin and trade it, because nobody controls it. There's not one government controlling it or printing it. It's pretty much a locked supply. So a lot of people have trusted. It's also been around the longest, and it was, there's a whole history about it. I think Zenith went into that detail as well. Enter Ethereum. Ethereum took it another step forward in the evolution of crypto, creating smart contracts like I talked about. Smart contracts, all you need to know is, just like a blockchain shows you a ledger or transactions on this chain, a smart contract allows you to package up code and have programmable information that occurs on these little chains that make up the blockchain. So every transaction that occurs, there's some action taking place in there. These smart contracts allow you to do a lot of different things inside these transactions, making it very powerful. I'm not going to get into it too deep here because it's a little bit more deeper dive. And like I said, we're trying to keep this very intro at a very beginner level. Solana, people claim it's the fastest and cheapest payments. There's other chains out there. We can argue that. The reason I keep bringing up Solana is it's been backed huge in the United States. A lot of people are in favor of it. I currently do not own any Solana. I did back in the past. But it's a chain that's out there that gets a lot of attention because of, it's competing for that market cap that I talked about.
Notably, there's also a lot of venture capital funds that are backing Solana as well. So there's a lot of people that are already making big bets, not just on the token itself, but the infrastructure and all the groups behind it.
Correct. Thank you, Zena. That's correct. And that's the reason why it's getting a lot of attention, certainly in the United States, because it's a US based blockchain here. So consider it like the US version for crypto. And that's why it's getting so much love, at least in the United States. Crypto market. It's funny. The markets have done a lot recently at the time of this recording. We went from 3.5 trillion. We're now at almost 4 trillion. And just since the time I made this slide to now, that's within a week. That's crazy. Anyhow, it's moving quickly, but Bitcoin makes up 62% dominance of the time of this recording, give or take a little bit now, but 62% dominance is the Bitcoin currently. Ethereum only makes up 8.8, and then Solana makes up 2.3. The rest of the total market is only less than 10%. So you can see how it's very concentrated at the top of these crypto coins that you see. And what you're seeing right here is a screenshot of, if you go to central exchanges, you typically will get a view like this. And you can come in here and you can select which coin you want to buy, but they always rank them typically by market cap as the default view. But you can change and filter on different areas when you get in these central exchanges. But for right now, just know that when you go to any central exchange, this is typically the default view that you have when you're looking at all the coins and opportunities you can buy on a central exchange. Okay. Like we said, we want to use central exchanges because yes, it's a very easy intro for new beginners to crypto. But what the heck does that mean? User-friendly experience. Central exchanges are not like stock apps, and I mean they're like stock apps in the sense that if you ever have traded stocks and you've been on E-Trade or Fidelity or any of these types of interface websites you go to trade stocks, it's the same feel. Okay, it's very much the same feel. They're almost treating it like it. Now, unfortunately, the reason why crypto was created was not to do this. but it's been more or less, I'm not gonna say hijacked, but it's been used this way. So a lot of people in crypto look at it through the lens of this. If you have to start here, but once you start to really understand crypto and how it's supposed to work, you move into something called DeFi. And like I said, we're not gonna talk about it here because this is the starting point. But anyhow, what I'm getting at is if you are familiar with stock apps and you can trade stocks, it's the same type of interface. A lot of it's very similar. It's just it's crypto instead of stocks. Um, the other thing that's good about these central exchanges are if you connect to your bank, you can just easily deposit money out of your bank into these central exchanges, which is known as on ramp. And then there's of course there's off ramp, where if you want to sell your crypto and you want to move that money off the central exchange back into your bank, you can do that too. So it's very simple to send money back and forth from a central exchange from your bank account after you set up everything, and we'll cover that here too. Right now, it is the current administration, currently at the time of making this video, is very pro crypto. So regulations have gotten much more clear. It's safer. They're getting closer to being protected like a bank. Currently, the FDIC is now allowing banks to own crypto, which is huge because back in 2020, anything before 2025 or at the tail end of 2024, crypto has been fighting a lot of legislation, a lot of regulatory fights. So these central exchanges are easier to work with because of this, because they're very much like TradFi, traditional finance is what I'm alluding to. The central exchanges that we're going to be focusing on as far as ones that we like, and not necessarily, I used Robinhood when I first got into this back in 2000. It was quick. I could open up an app. It was very fast. I personally would never use Robinhood again. Once you understand these other central exchanges, they're more features. They feel more professional. They feel more just more clean and everything. Robinhood is quick and easy for a lot of people. Certainly people who are on their phones all the time. It just seems to be a very easy entry point, and that's what Robinhood's been known for. Robinhood has been great for the crypto industry because it onboarded a lot of people because of the simplicity that it put in place. Back when I was using Robinhood, it didn't even have CYA, and we'll talk about that here in a minute. But so, for a long story short, Kraken, Binance, Crypto.com, Gemini, and Coinbase. Those are the main five that tend to have that are very solid central exchanges. Coinbase currently is the leader in the United States. Crypto.com is not too far, is still very well, and I believe isn't Kraken US based?
I don't know for sure.
Okay, I believe it is, but Coinbase is the king in the United States at least. And like I said, if you're
Yes,
watching this in
Kraken
other
is a
country,
US based exchange,
okay,
headquartered
great.
in California.
There you go. But Coinbase is the king. It's already traded on the New York Stock Exchange markets, so it's very much out there. It's partnered with a lot of institutions. It's being used to funnel in a lot of money to these traditional finance companies that are forming it. It's known as ETFs and other products in the traditional market. So Coinbase is the king right now in the United States. But these other central exchanges are fantastic. I bring up Robinhood because of the low barrier of entry. Me personally, if I'm going to do it, I don't think I'm going to go Robinhood though, but it's something you guys might want to consider if you just want to try out crypto quickly. It's a way to maybe set it up.
Hold on real quick. So the reason we mention all these different centralized exchanges is because you might not have access to all of them wherever you are at. Some of these centralized exchanges are actually regionally locked, meaning if you're in the US, there are certain states that don't allow certain exchanges. And as part of the Know Your Customer protocol, or the KYC, you have to provide that information to these exchanges. Additionally, the reason we bring up Robinhood here is, even though it's fundamentally different, because when you buy on Robinhood, what you're actually doing is you're kind of just giving them money and they're writing it down in a notebook. They're not actually setting aside crypto for you that you can later just like pick up yourself. You can try, it's a very difficult and tedious process, but it's mostly kind of like an on paper kind of thing. All the other central exchanges that we're showing you here today, you are much, much more easily able to actually transfer cryptocurrency in and out of that exchange to a personalized private wallet of yours. Again, Coinbase, as it stands right now, is the largest in the United States, and I don't believe that they're regionally locked. I want to say Crypto and Gemini are regionally locked, and I know this because I've run into it myself as I've moved around over the years. But Binance, also another very large one, not US-based. Crypto.com, also another large one. If you're a UFC fan, you've probably seen that logo and some of the ads for the pay-per-view events there.
All these central exchanges, keep this in mind. You can have set up an account with all of them. Matter of fact, a lot of us have accounts on many of these central exchanges. Why would you do that? And once you have one, you should be good, right? The difference is they hold different coins on their essential exchanges. So let's say there's a coin out there or a token you want to buy. Well, if it's not on that central exchange, you're not getting it. So, but if you look across, say, 4 or 5 of these central exchanges, a good chance it will be on one of these other central exchanges. And keep this in mind. Even though you set up all these central exchanges, there's other coins out there that these central exchanges just won't have, because they have to stop somewhere. There's 17,000 coins or crypto coins that are different. There's different ones, right? They can't put all of them on one central exchange. So, or at least they just aren't going to. So this is why it's also best to have many different central exchanges accounts for that purpose. And at the same time, keep this in mind. Sometimes these central exchanges go down. It seems like it's interesting during high trading volumes when there's a lot of activity. These somehow go down. It just seems like it's inevitable. It always happens. Some of them go down. So it's always best to have at least some active, because the worst thing to do is be able to try to access accounts or be able to take action to buy something or sell something, and you don't have access to it. At least you have a fallback. So keep that in mind when you're setting these up. Okay, so here's what you're going to have to do to set these accounts up. Every central exchange is going to be the same. They're going to require the same things, depending on what country you're in as well. But they all are pretty much the same. These are the same steps for most of them. You're going to go to, now I'm going to use Coinbase for this example, just because we picked one, it's here. I'm not saying that this is better than any of them. We're just using this as an example. So in this case, you'd go to this central exchange, go to the website, you click their sign up option. And then from there, you're going to do some email verification. Then you got to do ID identification, where you have to upload your driver's license. Some of them maybe even require a second identification, something like a passport, a utility bill, something along those lines. You have to do it. And that's just this KYC, know your customer. This was something that was, this was introduced. Was this in 2023 or 2022 when it was introduced?
I want to say it was even earlier than that. Some of these platforms kind of just got ahead of the ball on it because they were anticipating that the good old SEC or the IRS would be asking for some tax documents. So they figured we should probably get set up on this. But yeah, this is, in crypto terms, relatively a new concept, because originally, hopefully you didn't have to verify anything to anybody because it was supposed to be trustless and peerless. But the major bottleneck right now is the centralized exchanges. Once you have money in crypto, you can move it around pretty much like anywhere you want, anytime. But as far as getting money in, yeah, the centralized exchanges is the choke point, and KYC is slightly part of it. Additionally, just as a heads up, if you have not registered with any of these before, similar to like the first time you set up a trading account on Fidelity or something, there's probably going to be a 7-day waiting period before you can actually transfer any money on that account outside of the centralized exchange. So that is one of the other hiccups to getting into this. It's why we also say Robinhood's the fastest, because they don't have the waiting period.
Yep, correct. Yeah, KYC, when I first started doing this, there was no KYC. You just come and go as you please. And then all of a sudden, anything that was being done in the United States, you had to have the KYC in place. So now you have to do this. They want to know who is doing transactions on the crypto. Here in the United States, the IRS, everybody wants to know what you're doing with your money, unfortunately. Kind of goes very it's very anti-crypto, but that's here nor there at this time. Enabling two-tier authentication, everybody should somewhat know what this is. This is basically having a cell phone or an email address. So when you're logging in with your credentials, and they need to know where to send it to validate it's you and not somebody else. That's actually a good security practice. You definitely want two-tier authentication. Most of them won't even, they will insist you set this up. Then after that's done, you link up your bank account or your credit card, or how you're funding the account. And at that point, we recommend doing a deposit. Now you can do $100, $50, $10, whatever you feel comfortable with, but you want to do some type of transaction to get money out there so you can see the whole process. Once the money's out there on the central exchange, like Zenith was talking about, you're off and running. So that's the good news. We're going to go ahead and launch a quick video here for Coinbase and it'll show you, it's like 2-minute video. It'll show you exactly how to do it. It was done very well. So we're going to show you that here right now at this time. So let me bring this up.
How to create a Coinbase account. To create a Coinbase account online, go to coinbase.com. Select Sign Up in the top right corner of the homepage. Verify whether you want an individual or business account, then select Get Started. Fill out your first and last name, email address, and create a secure password. Check off the box acknowledging your age and agreeing to the terms and conditions, then click Create Account. You'll now be prompted to verify your email by clicking on the verification link sent to your inbox. For added security, you'll be prompted to set up your two-step verification by selecting the country you reside and entering your mobile phone number, then selecting Send Code. Enter the 7-digit code sent to your text messages, then click Submit. Next, verify your country of citizenship and click Submit. You now have the option to complete the identity verification process by filling out this form with your personal information. Or you can choose to skip this step for now by selecting Skip in the top right. The next required step is to add a payment method. Click Continue to select the institution in which you will be using for your payment method. You will then be redirected to your institution site to sign in, verify your identity, and confirm you'd like to link this account. Coinbase will now link this account as your preferred payment method, which you can always update at a later time. In order to trade crypto, you'll want to finish verifying your info, which you can start at any time by clicking on Verify Your Info.
So you just watched a video on Coinbase. That's the process. Now keep in mind, it's not as quick as they just said it was, because keep in mind, there are some waiting periods for the validation aspects. Certainly the CYA part typically takes, I think, 3 to 5 business days, but each of them are different. Obviously, like we stated with Robinhood, you don't have to KYC because you don't actually own the crypto. It's like you said, it's more or less on a pad that they're keeping track of. But if you were to go ahead and do this, every single one of these central exchanges have a homepage. Every single one of these are here. We will share these in the link to this video. We'll put them down in the information tab. So it'll take you right to the page. It actually shows you how to set up your account on any of these central exchanges. They're all, like I said, pretty much the same. Once you set up one, you'll be able to do another one. And once you set these up, personally, what I would do, I would set one up and I'd go ahead and just keep setting them all up in that day. Just knock it all out. You have all the information you already have gathered. You're just going to replicate it across all the central exchanges and setting them up. And then as the KYCs come through and once they validate and they set up your account, you can now log in there and you can do your transaction from the bank. And sometimes these are, and that's the other thing that takes some time. Once you try and make a transaction from your bank to these central exchanges, normally they can take up to 3 to 5 business days also, give or take. So keep that in mind. It's another reason why you want to have multiple central exchanges to kind of get this going. And once you do this, maybe just do $50, $20, whatever you want to do, you feel comfortable with, to do a test transaction from your bank to these central exchanges. So they're all set up. Once your accounts are set up, that hard part is over. All that paperwork is done. You're golden. The other thing that's anything about this is, I may bring this up later in the slides, but taxes are all covered for these too. So you get at the end of this, just like if you were on a trading platform for stocks, at the end, they generate tax files for you. So that's all easy too. Okay, so on Coinbase or any central exchanges, there's something called trading. And all you're doing there is you're swapping one coin for something else. A lot of times once you deposit your money into these central exchanges, you're going to swap it into what's known as USDC or a stable coin. And all that is it's a crypto coin that is pegged to the US dollar. So it's worth $1 US or whatever currency you're in, it'll equate to that. And it stays pegged to that. So it's like cash. It's like digital cash, but in crypto. So you can keep it in that. You can also keep it in cash too on these central exchanges and simply trade from cash to another coin if you want to do that. It'll handle it all for you. It's probably best practices to go into a stable coin, because once you ever decide to go off central exchanges, that option, stable coins are how people sell coins, take profits and move it into what's known as cash, but a stable coin. So don't get confused. You have to be in a stable coin if you're selling products, selling anything you're selling, or you can swap it from coin to coin. So in this place, if I had Bitcoin, I could swap it into Solana if I needed to. And this is what the screenshot looks like, at least on Coinbase. So if you wanted to buy and sell, you click the coin you want to do and you select buy or sell. And that's pretty much it. It's not a whole lot to it. The trading option here, when you trade it, you're looking for the pair. So for this case, it'd be a BTC to Sol. You do it, and there's obviously a little transaction fee per trade that's how the central exchanges make their money, by the way. They do tax you for the transaction fees. Those aren't that high for a trade, honestly. Once you get into crypto, you'll realize on certain networks like the Ethereum network, on their blockchain, transaction fees can be a lot higher. They've come down a lot, but that's something else. I don't want to get into that here, but you're always going to pay for some type of transaction fee, regardless of what platform you're on. Trading tips here. There are some called limit orders. If you do stocks, it's the same concept. You're just putting these orders in and you're saying, hey, when this coin gets to this price, I want to buy or I want to sell it. You can set that so you don't have to be behind your screen at all times. For those people that can't be behind a screen, limit orders are great. You set them up, you forget it, you set it up and you walk away, and they'll stay active until that event triggers. So that's what's nice about those. Confirm the price on the crypto prices. They can vary between central exchanges. There's a lot of reasons behind this. I'm not going to get into it, but when you're looking at whatever you're trading, you want to make sure and you're validating what the price is on the central exchange you're going to make the chain or make the swap for. Don't go on some like a site that's following the price of your coins, and then all of a sudden you say, oh, hey, it hit $35. I want to make a trade here, and you go to central exchange and you realize it's not the same price. It's slightly off because there are discrepancies. Once again, start with small trades. Do like $10 test transaction fee, transactions to do that, to make sure you feel comfortable when you're doing this. Good news is on a central exchange, if you make a mistake or something, it's very simple to undo it. Unlike if you're not on a central exchange. Once you do it on a non-central exchange, once you do it, it is done. There's no undo button. So that's why another reason why central exchanges are great to start off on. Now, there's something called staking rewards that are on these sites too. This is going to be something that's come a little bit more. It's going to become a lot more. There's also liquid pools and liquidity farms. I'm not going to get into that, but they're just another variation of earning while you own these coins. So if you own these, you can start earning. So if you own one of these coins, you can start it and you can see the APY percentages. So if you're going to own something for a long period of time, why not get, well, I'll translate this to traditional finance as a dividend. I'm going to own it. I'm going to get paid interest while I own this, while I'm holding it. It's just if you're going to hold long term, why not get paid while you hold? That's essentially the same concept. There's more to why you're doing this staking. Like I said, I'm not going to get into this concept, but there's a lot going on with the reasoning that's really happening in crypto and why you're staking. But for this intention purposes here, you stake it, you're going to earn almost like a dividend for owning those stocks, or those cryptos, I should say. Options on Coinbase, they're very rates. So you can see the rates here for these APYs. Just like on those other central exchanges, if you had 6 or 7 of these things set up, you could go out there and you could look at saying, what are the reward rates? They vary from the type of coin you're in. Like in this example here, you see Polkadot at 14%. It's probably because there's a lot of reasons, but a lot of times it's because it's more volatile, and that you're paying for a little bit more risk to hold that, and you're getting rewarded for that. Those are some of the other options. Typically, the higher the APY, the more riskier it is to hold. It's not necessarily always the case, but in a lot of cases, that is the case. And then how to stake, like, it's real simple on the central exchange. There's buttons here, you click it. And that's the other thing on any central exchanges, even though you know what you want to do, even if you jump around from central exchanges, there's so many links to take you, okay, how do I do this? And there's manuals and they have documentation on how you do it on their central exchange. So there's always something there to hold your hand. Okay. Like I said, central exchanges are more safe for you, but you have to be, and you're protected on central exchanges, but be very careful when you're out here because you still want to use best practices. Just like if you had a bank account or you had any other sensitive information as money, you're not going to go around telling everybody this. You're not going to share your password. You're going to have two-tier authentication. These are the things you have to do. One big thing that's been happening recently, certainly in crypto, is people have been getting DMs. So Coinbase had this just happen to them a few months ago. They had a lot of clients get scammed out of their money. And what was happening was hackers had got access to people's cell phones and were sending it out to them, acting like they were tech support or there was some type of verification they needed. People were clicking on it, and then the hackers were gaining access. And from that action that those users took by replying to a DM or a text, that allowed them to gain access and log into their accounts and start draining accounts. What the rule here is, in crypto, there's something we always say: treat everything like a scam. Do not click on any texts. Do not open up any emails. If you're getting an email or something from a central exchange telling you to do something, there are the actual phone numbers that you can call and talk to tech support. You can also log into your account on the central exchange. If there's any actions you need to take, they always have alerts that are in there with messages telling you if you need to do something or not. That's how you properly do it. You don't ever use a third party or any type of communication tools with central exchanges, period. Just do that and you will save yourself a lot of headache. These hacks are going to get more intricate. They're going to get more prevalent because of the advancements of AI technology and other type of software that's starting to come about where hackers are getting very creative. So real simple, treat everything like a hack, like a scam. Log into your central exchange and take action in there. If something's telling you to do something, just log in. I think I stayed in here for mounts movement. Yeah, so on this one, long-term safety, I put in this here because long-term, if you're gonna hold stuff, you're gonna wanna move something to a hard wallet. We're not gonna get into that right now, but if you wanted to do that, we'll talk about this in later videos, or one-on-one courses, but if you have large amounts of money, you will wanna probably start sending them off a central exchange and putting them into a hard wallet, much more advanced technology. The next recording we do, we'll dive into that. We'll talk about it, and you'll see that there's a little bit more you're going to have to handle because now you have to handle the security. It's not something to be scared about. It's just use best practices. But that's how you would do it if you're going to have a hold for long periods of time. You typically want to move it off the central exchange. Just to give you an idea of how many exploits have happened, these are on just central exchanges alone. Bybit had $1.4 billion that was ETH stolen from them. 1.4 billion in 2025. 477 million off the FTX. That was a huge debacle that occurred, and obviously it was an inside job. But 11.3 billion dollars in client funds were mismanaged. Acumen Research, Sam Bankman-Fried, if you ever heard of him, that was the whole thing there. It's an absolute very complex story to explain. Mt. Gox was the first big notorious one in 2014. 850,000 Bitcoin were stolen. Users just today have, over the last year or so, have just started getting paid back. Some of that, not all of it, just some of it. So that's the concern about central exchanges. This has gotten a little bit more better at this point, but at this time, things are getting better in this time. So, okay. The other thing about crypto, obviously, when you're going to be trading, understand it's very volatile. The volatility, this chart here, just gives you an idea. This is just over the course of the last 4 or 5 years. You can see how this is just the Bitcoin price. From green line to green line here, from here to here, over 1,000% gain. From here down, negative 50% gains. From here up, another 113%. You can see the roller coaster ride here. And keep this in mind. This chart doesn't even go out to here. Now, Bitcoin is currently at $120,000 at the time of this recording. So very volatile. That's something you're going to have to understand if you're getting in crypto. It's a more volatile asset. Bitcoin is the least volatile because it's the largest market share. It's starting to get the most mass adoption. More institutions are holding it. It's becoming more stable. Keep this in mind. The rule of thumb is this: the more stable the coin, typically the less percentages and movements you're going to get. The higher the risk, the more chances for more gains, just like in anything else when it comes to stock trading, things like that. Just keep that in mind. Volatility is high. I'm not going to get into more into that, but it's just very high. Fees and scams. Obviously, there's fees for out there for trading. But like I said, scams are everywhere. Phishing attempts, airdrops. There's tons of airdrops. Typically, that's not going to happen in central exchanges, but you just need to be very careful in the central world. But like I said, central exchanges is a safe place to start. And once you come off of a central exchange, that's when you have to be at high alert and set up everything. And like I said, it's nothing to be scared about. It's just no best practices. Regulatory impacts on the mitigations. Things like this is just an example. Currently, we're dealing with tariffs being done. So any macro events are going to absolutely cause the effects of crypto. Know this, though. Crypto is considered a risk-on asset. So in the traditional markets, risk-on assets will have the most gains, but they'll be the most volatile. And so even in traditional markets, they're starting to tell their customers it's okay to own a percentage of these in your portfolio. But even then, they're not advising anything more than 5%, 10%. 20% is extreme risky for a portfolio in the traditional markets. But once again, they don't necessarily understand there's a lot of technical analysis and waves and timing, on-chain analysis. There's a lot of stuff to tell you when the times to probably be getting into crypto and when you probably need to be getting out of crypto. But just know that there's a lot there on when to get in and when to get out. It's definitely an art, and probably a science to go along with that as well.
Definitely a science, but the final point to hammer home is understand volatility is a feature, not a bug. It does scare away a lot of folks, but at the same time, though, you can develop strategies to help mitigate against it, depending on what you care about. So it's really up to you how you want to try to play it. You could just be Michael Saylor and buy Bitcoin and hold it forever and plan on never selling or until you have to, or you can try to get more trade heavy with it, which is try to capture highs and sell on highs and capture lows, that kind of stuff.
Correct. All right, so this is what we would recommend. I mean, you can do what you want, but here's what we'd say for beginners. We would probably set up portfolios on some central exchanges. Personally, if it was me, I'd probably set it up for at least 4 or 5 of those that we listed. Why? They're going to come in handy when you need them. I promise you that. Set those up. It doesn't cost you anything to really get them going and set them up. Deposit and get them going. Once you have set up, those are all done. All the paperwork is done. You can do them in parallel. So as you're waiting, you're setting the next one up. So once they're all done at the same time. That's the why you would go ahead and knock them all out. We would recommend also expanding your portfolio on the central exchange, diversifying the different types of cryptos. Maybe on one exchange you're using, maybe you trade, I don't know, Bitcoin and maybe Ethereum, and on another one, maybe you trade something differently. You don't have to do that, but just know that those are things, because there's some coins you may want to get into that are not on one of these central exchanges, but it's on the other one. So, use your best judgment on what's out there. Another thing is, another good strategy we like to do is taking profits. Typically in crypto, when you make 2.5x's, that is 250%. You typically take 40% off, you make another 500%, take 40% off, and keep the other 20% on in case it just goes parabolic. Crypto does do this. So keep that in mind. You do what you want. These are just kind of rules these are kind of rough rules. Some people take only 30% off at these levels, and give or take an X or two, and what percentage. It just is just a rough guideline we like to throw out. Diversify the investments. A very safe investment would be 50% Bitcoin, 30% Ethereum, or even safer if you wanted to do 60% Bitcoin, 40% Ethereum. We throw Solana on here. I'm not really a big Solana person. I'm just putting it on here because it's one of those big market caps. You could throw XRP in here. You could throw Cardano in here. You could throw, what's another good big market cap coin that's out here? That's pretty good. There's other ones out here. Personally, I like Phantom. It's more like, it's not quite in the top 20. There's other coins out there. So just know that. And like I said earlier, all your taxes are handled on the central exchange. So at the end of the year, when you got to do taxes, you go in your account and you can print off or send to yourself an email all your training, all your history. So those can be handled for your tax purposes. Obviously, you're going to contact your tax professional and any CPA you work with on how to basically handle crypto, because every state is different. Federal laws are different per state. So definitely talk to your tax advisor for the details. We know a lot about it, but we're not professionals. We can't advise you and do anything like this, but we can tell you what guidelines and what you need to be aware of. But still, once again, you still have to go to a tax professional legally if you get this advice.
That's true. And by the way, this is the part of the video where we tell you nothing in here is financial advice specifically. What we're doing is creating hypothetical scenarios that are either tried by us, or we're trying to theoretically build portfolios for specific purposes. So don't just take all of this without any sort of grain of salt with it. Understand that this kind of strategy, what it's doing is that when you sell at profits, at specific increments of profit, you're locking in certain gains. Yes, you are minimizing upside potential by selling off slightly early, but what you're doing is guaranteeing at least something. Additionally, this kind of a diversification here with half Bitcoin, about a third Ethereum, and then the rest into Solana, what this is going to do is it's going to give you some exposure to the big three effectively. This is going to be one of your most passively, or how to say, least aggressive portfolio diversification strategies you can have. Again, diversifying just means you're spreading it out across different things, meaning that you're minimizing downside if one thing goes down, but at the same time, you're also minimizing upside in case one of them runs harder than a lot of the other ones. Common strategy here is that if you want to play it more safe, have more of your assets into what you believe are the lower risk coins. If you're chasing gains, then what you can do is try to allocate more into what you can call your experimental or aggressive part of your portfolio, that kind of stuff. But that is more advanced. Right now, we just want to get folks on board, have you go from physically having cash in hand to actually having crypto under your ownership. That is the goal here.
Correct. I'm going to bring up now a shameless plug for us. This is our website. We actually have a Telegram channel. We work with people. We have a membership out here too, where we help a lot of people. Intermediate, advanced. We have also experts in here too. We actually talk. We talk about crypto. We're giving constant advice. We're getting technical analysis so that have a pretty good idea what the market's going to go up, when it's going to go down. We have on-chain analysis that we dive into. To give you a little taste here, go back to the homepage. We get into the technical analysis. So what are all these lines and charts, and what the heck does all this mean? We keep you in touch with all the macro news, and currently right now, and for the last 2 years, it has been nothing but macro news. Crypto is, what do they say? 1 year in crypto is like 10 years in the traditional markets because it's constantly changing so fast. So we keep you up to date on all this information. We also have shows that we have where we talk about, every week we get on there, talk about a lot of stuff. Blockchain technology or blockchain data. The traditional markets don't really have this. They don't talk about this. This is another tool that we have. It's because everything is on a blockchain, not on the central exchanges, but everything's on a blockchain. You can see a lot of information on telling you when the markets are getting overheated and hot. Probably best time to maybe start taking profits, or when's the best time to really start going in aggressively and buying as much as you can get. We also security threats. We're going to be having a lot of stuff going into the security and how to protect yourself. There's a lot here to really digest, a lot to take in. And we also get you exposure and tell you what to get into on the traditional markets and how to have that same exposure, whether it's a 401k, IRA. There's a lot of stuff in here with the landscape changing with regulatory in the traditional markets with crypto. You have ETFs, which is exchange traded funds. What's the difference between a spot ETF versus a futures ETF? What is the difference between which companies out there are currently buying Ethereum or buying Bitcoin and building up treasury stocks that are very low cap that people aren't seeing? A lot of traditional markets, this is brand new to them. A lot of them are not aware of what's going on. There's a lot of investors and VCs on the back end making a lot of deals right now. And it's because they're trying to navigate through the legal storms and the regulatory storms to try to gain those future profits that crypto is going to be providing, and has been very aggressive over the last year. So lot to take in here. We don't expect everybody to come here and know it all. Luckily for you, we have a team here of all of us, that the 4 of us who have been here, if you put all this together, we're pushing close to 25 years experience in crypto. Crypto hasn't been around that long, but we have all had roughly about 5 years experience in the crypto market. And that 5 is like 25 in the traditional market. I'm sorry, 5 is like 50 years in the traditional markets, because it's anything you could imagine changing. You're seeing this landscape change in front of you at your eyes right now. And you need to know where you came from, where we're at currently, to know where you're going to go. And that's why we like to help navigate you through this. We have memberships. We felt we priced it at a very low price to help people to get in here. We're not trying to charge $1,000 or $10,000 courses. Some of these people are here insane. We like to do this $40 membership a month will get you in here. It'll get you to we stream almost every day. So you're getting live information. If you can't make it, we do recordings. We have transcripts that are put out there, so you can have access to it and look at it at your own leisure. If you want to pay for the course in crypto, we have ways to do that too. You just reach out to us and we will be able to handle that for you. So just want to do a shameless plug here, because we feel like this is an opportunity to help others learn from our mistakes. It is a lot of effort, so we are charging something, but there is a lot to take in. And there's people starting to come about talking about how to get you in crypto and what they're doing. I beg to differ that many of them have been around as long as we've been around to really help you. So we are helping a lot of people right now. Okay. That's pretty much it. Zenith, you want to wrap it up on this one? I know the next one we're going to be diving into is going to be DeFi and how to actually get off essential exchanges and get into your wallets. So that's coming up next on the next one we do.
Sure thing. So the wrap up today is understand what a centralized exchange is, understand how you can get signed up for one, how you can transfer money onto it, turn that money into an actual cryptocurrency that is still staying on the centralized exchange, and then understand very, very, very basic strategy and portfolio setup when it comes to what coins are interesting, how do you diversify, that kind of stuff. The main thing to know here is that it's not going to be perfectly instant. The minute you go to the centralized exchange, you got to give them some information. You got to have a little bit of a waiting period, but it is a relatively quick process considering other alternatives out there. But this is a much, much safer and the much better route than going trying to find some guy on the internet and hand him $100 for Bitcoin that he's going to send to a wallet to you. This should get you on board and at least able to make your first purchase if you wish to do so. But outside of that, we will be covering what to do after this in the next one, along with a lot more about security fundamentals. Security is absolutely the name of the game when it comes to crypto, because you got to be in the markets to capture gains. And the longer you're around, the more you're going to survive, the more you're going to actually be able to grow this overall. Outside of that, though, yeah, that's pretty much it for this one. We do have security and DeFi coming up. If you have any recommendations or topics you would like us to see, please drop in the comments below. Or if you're one of our Telegram members, you can actually reach out to us in there, and those guys are going to get priority first. So small incentive for you to get over there, join our excellent group of people doing great work, and our community, which we're all learning and growing together. We're going from beginner to intermediate to expert. Everybody's included, and there's a lot of crypto information. The more people you have fighting the same fight, the better you can do it together.